Hey guys, welcome back to the channel. Today I'll be going over how to get historical yield curve rates directly from the US Treasury. I'll leave the link in the script so you can go ahead and access it. But the nice thing about this page is that they provide the XML for the data for any given year, ranging all the way back to 1990. So for this script, I'm just going to pull 2021 data, but you can alternatively select any year as long as it's within this range. So if we click on XML, this will be the link I'll be using to extract the rates. So within the script, we see that we have dates along with the daily rates. So in the R script I created, I'm going to go ahead and extract the dates along with the rates, and then I'll turn it into an XTS object so we can use some functions to analyze this data further. So let's go to our script. So here's the link to the US Treasury if you want to access that page, but the link to the XML is actually this link we have here, and all we have to do is specify the year. So for the year, I'm just going to specify 2021. I'm going to go ahead and use read XML to read in the page. Now within this XML, I actually had to single out the children within the XML script and then converting it as a list so that I can single out the dates and the rates for each of the given days. So it'll loop through the children in this XML script, which contains the data for each of the days. So after we single out the dates and the rates, I'm going to go ahead and use cbind, and then I'll use that data frame to convert it into an XTS object ordered by the date. And then I do a bit of formatting for the column names and then just return that data. So I'll go ahead and minimize this block, and then I'll go ahead and run this line. So the next thing I'll do is I'm going to row bind the rates and save it into this rates variable. So if we run that line and then we take a look at rates, now we have an XTS object for each of the days and all of our rates. So we have a total of 120 entries starting from January 4th all the way to June 23rd. And each column represents the given tenor. So the 1 month, 2 month, and so on all the way to the 30 year. So let's go back to our script and see what we can do with this data. So I'm going to go ahead and plot the spread between the 10 year and the 3 month. You can also download the spread via Fred, and I left the ticker there. So essentially these two spreads should be identical. So let's run this line. And then I'm going to go ahead and use chart series to plot it. So if we take a look at that plot, here we see the year-to-date spread between the 10-year and the 3-month. So the spread is at 145 currently as of today. Let's take a look at the spread over at Fred. So over at Fred, we see that the rate is actually at 145 as well. Now let's take a look at the daily yield curve for this month. So over in our R script, I have coded some things to actually extract the very first observation in June, and I'm going to change this to the 23rd, so it'll be from June 1st all the way to June 23rd. So I'll plot the yield curves for those two dates so we can visually see the changes between these two dates. So if we plot that, I'm going to go ahead and add the lines. I'll format the axis, and I'm going to also add a legend. So if we take a look at that plot, alright, so we have two yield curves. The black line represents the yield curve at the beginning of the month, so June 1st. And the blue line represents the yield curve as of today. After the 7-year rate, we see declines on the current yield curve, which is kind of why I think we've seen a rally in growth stocks lately, specifically for this month. So now let's go ahead and plot the daily yield curves for the whole month and see if we notice any patterns. So if we go back to our script, I'm going to get the location for June 1st. So that'll be my starting point. I'll plot the very first yield curve, format the axis, and then I'm going to go ahead and plot the remainder of the rates for that month. I'll then change the color of the very first yield curve to black and the very last one to red. And then I'm also going to add a legend. Here I'll go ahead and change the date. So let's go take a look at our plot. Alright, so the black line is the yield curve at the beginning of the month, and the red line is the yield curve for today, June 23rd. All these grayed out lines you see are the daily yield curves for all other days in this specific month, and we can see starting from the 10-year all the way to the 30-year that we are sitting very close to the lows. Now I think that if these longer term rates continue to fall, we can expect to see more of an upside on growth stocks. So I'll be keeping a close eye on these rates. So this concludes the video, guys. I think there's a lot more to be done using these rates and the yield curves. One thing I might want to do in the future is analyze when this yield curve flattens to see how long it takes to get a correction. So I'll try to work on a script, and once I have that completed, I'll share that with you guys. But in the meantime, I'll post this script on GitHub, and I'll leave the link down in the description area. Please subscribe to the channel if you haven't done so already. Thank you for watching, and I'll see you guys in the next video.